Hello, real estate investing fools. I'm Deidre Willard, an editor at Millionacres. And if you're like me, you've probably been following changes in retail real estate this year. The bounce back has been amazing. It's been kind of a wild ride in terms of retail, but really the retail revolution, I think, was taking place long before we ever, had to worry about a pandemic. So to talk about retail real estate and commercial real estate, I'm excited to chat with Jerome Maldonado, who's an experienced real estate investor and entrepreneur and happens to be talking to us from a construction site today, which I feel is really awesome. Jerome, I wanted to ask you, because I've looked at your website and I talked about this with a friend, I feel like a lot of people get started in real estate, they go with residential, it feels more comfortable. Do you think that they're maybe missing out in some way without starting on commercial?
So first of all, good morning, and thank you for having me on the show. And yeah, I do think so. I graduated to commercial real estate investing early on in my career, and I've been multi-diverse. So I've kept a pretty even portfolio of residential in the early years, and I made a lot of money in residential development. And then I deploy a lot of it into commercial development and real estate holdings. And yes, retail and office is very distressed right now, especially on the larger square footage. But I tell people, I was on a call with my team yesterday, and I had the gentlemen that I work with in our inner circle show me some vacant land in California, and they have a redevelopment plan put together there. And I asked him, I said, okay, so do you want to be the first person in that area as a trial run, as an investor, to be able to develop something, or would you rather do what I've done over my career? And it's taking value add properties, a lot of these distressed assets, finding them and repositioning them. So I kind of walked him in a full circle as to how I would deploy money into that area, not that property, into that area to reposition it for profitability. And at the end, his eyes were starstruck, and it was a business plan that he hadn't considered. And it's what's creating opportunity in the commercial sector right now as we speak. And there's a lot of opportunity there. You just have to understand the ins and outs and the dynamics of where there is opportunity so that you can exercise it, obviously. But there's a lot of opportunity in the commercial real estate sector right now, if people just understand how to get their hands on it.
Well, I've seen you talk about commercial house hacking, and I haven't heard anyone talk about that before. So it's a fascinating concept. What is it, and how do you do it?
I try to sell people on the fact on how much easier it is to buy land and build houses. I started doing it in early years. I accidentally landed up in the construction trade by default. I consider myself a business person more so than I did a real estate person. I started in direct sales and network marketing in the early 90s. I got a great foundation. And when things fell apart in 1997, the FTC came in and restructured network marketing companies, a lot of big companies like Amway, parts of it. Things happened in the industry. So it left us without an opportunity. And I landed up back home, finishing up my college degree. And my brother-in-law was in a position where he was unemployed, and he was in the construction trade. And so to help him and my sister, I went to go help him get his contractor's license, and I piggybacked alongside of him. He didn't show up the day that we took our exams, and I did, and I passed, and I knew how to sell. And I started doing construction. And about 2 years into this construction ordeal that I was doing, I was doing extremely well. I was grossing seven figures. I shouldn't say I was making seven figures. I was grossing seven figures in the first couple years that I was in business. And I thought, what if I started buying land and building some houses? And what made me do this was there was this cool looking older man at the time. I'm probably his age now, right? But he was an older man at that time. And he was driving a Harley Davidson, all tattooed, rings on. He just looked kind of cool. And this guy seemed like he didn't have a stress in the world. And we were working on a project by there, and he was building the houses. He was the builder. And I thought, man, this guy just seems to have such a cush life, and just seems to love what he does. And so out of curiosity, I started talking to him over the course of a few different days that I went down and checked on projects. And lo and behold, he was a really good guy. He was from New Zealand. And he was buying land and building houses, and he was just doing a few of them a year. And I'm real bold when I ask people questions. I asked him what he was making. He said he was making about $80,000 to $100,000 on each house. And I thought to myself, geez, if I could do that and just add and complement to what I'm doing, what a great concept. So I was bold enough to go out and buy a piece of land and build a house. And the first one was challenging, like all things are the first time you do it. And that's what I tell people. The hardest thing they'll do is the first one. But once you learn the fundamentals of how you actually buy land and just build a house from the ground up, it is so substantially more lucrative and less work with less variables than doing the fix and flip deal and doing a lot of that other stuff. That's a lot of work, just as much work, and the profitability is lower and the risk is higher, especially right now. There's no inventory, right? So when I'm explaining to people is, what do you do in a market where there is no inventory and you're fighting to compete with other people in the same business? Then you buy something that's overinflated, you dump more money into it, and then you try to take that asset and sell it for even more money. And the variables go up as far as risk. And I'm always about exercising and minimizing my liability to the minimal amount, and decreasing my risk and increasing my profitability. So like I tell people, I say, instead of going out and fighting for inventory, why don't you just create inventory? And it's been very profitable for us. I've built well over 200 homes over the years, and I never do a build that we don't make six figures on. So we've made millions of dollars doing it. And now we're helping a lot of people do it, and they're doing one a year, making anywhere between $60,000 and $100,000+ a year per build. And it's less risk. Out of the hundreds of homes that I've built, I've never lost money. Even in the 2008 recession, because I started doing this in 1999, and even in the 2008 recession, is as much as I hated selling my inventory for a discounted price, I still made a profit. Lo and behold, as bad as the market got, I still profited. $37,800 was my worst profit on any house I ever built in the worst economic crisis that we've ever seen in history. And so, with that being said, people ask if I'm worried about a downturn in the economy, and I tell them no, because my business model, the way I run it, if you build like I do, I don't really worry about it, because we've had success in every single build we've had in multiple economic ups and downs. So I love it. I love house hacking. I love building new construction. And then I take that money and deploy it into multi-unit real estate, commercial real estate, and I do it tax-free. And that's what makes it fun, is the way we do it tax-free.
Interesting. So how does the financing work for that?
It's different for each person, right? So I did it cash. What I did when I first got started is I had a single family home that had a lot of equity in, because I ruined my credit when I was in network marketing. Had horrible credit. My credit was in like the 400s. And so when I first bought my first house, I put a lot of money down on it. So I had a lot of equity. So what I ended up doing to build my first house, the first house I did, is I got a home equity line of credit out of my house. I took $150,000 out. I did have the fortunate opportunity to have a little bit of money saved. So with about $200,000 and $225,000, I was able to buy a piece of land and build my first house cash. What would I consider cash? I use good debt. Good debt is when you take debt on an asset that you can deploy into something that generates you capital, that makes money for you. And so I took out what I was considering good debt, and I still consider it good debt, on my home, because that money was sitting there stagnant. And so I pulled it back out and I deployed it into the first house. I made about $80,000 in profit. Plus I had about 200 and a quarter that I had deployed out of either savings and my first home. And so I was able to go out and do that again. And so I did a second home and even a third home. And I was able to have the fortunate opportunity to have a very lucrative business going. So I was able to pull money into doing 2 homes. And I ended up doing 3 homes in the first year that I did this. And the second set of homes, I made just shy of 100,000 per home, and I made 80 on the first. So then I was able to go out and do 3 homes cash. And so I actually continued that process, and we were doing 12 homes a year cash, debt free, and we still do them debt free. Now, we do have a $25 million project going on in the Seattle area right now. That one we're not doing it quite the same. So we use institutional money. I'm not going to put $25 million of my own capital into one project. It doesn't make sense to do that. So locally, in our local business that funds our payroll, where we are the general contractor, we still build cash and we still build debt free. It's the security blanket, quote unquote, of my company, and it's what kept me alive during the recession of 2008. But in all honesty, what I do is I'll go in, I buy the land now, and so I'll pick up the land like in Seattle, and then I go in and get institutional money. So to build out a $25 million project, all I really need is about $5 million to do the whole project from start to finish. So I'll buy $1 million piece of land, actually about $2 million to get everything that I need on. And then I'll borrow another $3-4 million, and then I revolve the capital because I can't get permits. I can't build all of them all at one time. So I just revolve that same capital 2 or 3 times in the same project. And over the course of 2 years, I can build out the whole project. And so I'll get institutional money. But most of the time, you have to own the land. And what I tell people is you can do this without money. You have to find an owner who's willing to do owner financing on the land. They have to take second position on the land. And if they do that, then you can go get institutional money. You have to fund the designs for your build. And that's your expense out of pocket. And if you expense the designs out of pocket and you're able to get owner financing on the land, and they're willing to take second position to the bank, they can lien the property. And when you sell off the property, they get paid out at closing. The title company actually pays them out. And so the liability risk for the seller financing is pretty minimal for the seller, as long as you know what you're doing building a house. So, you just need a good coach. You need someone to help you on that first one so that you understand the process. And that's the biggest variable.
So with commercial real estate, are you looking more at buying value add, buying something that needs a renovation versus building new?
So we've changed over the years. Early years, I bought value add. I still buy a lot of value add. There's a lot of money in value add properties. And so early going into this, I started buying 8,000 to 12,000 square foot retail centers. I still own a lot of them today. There's a big market for that. So when we say that retail's dying, big box retail's dying. Small retail, there's still a huge need for. Mom and pop shops are still alive. A lot of beauty salons, little churches, nail salons, little restaurants, Subway stores, little stuff like that. We get a lot of that stuff in our buildings. And so they're very lucrative, very, very viable and cash flowing to this day. In fact, we got rid of bad tenants and increased our tenant ratio with better tenants over COVID and over the pandemic this year. So I was actually very pleasantly surprised with the outreach of small business owners during the pandemic and how we actually were able to restructure better tenants into our small retail and office properties. So in those properties, value add is very viable. It's a very lucrative area to invest in. Also, I do value add in multifamily. Multifamily's gotten over leveraged. And so right now, one project that I have going on is in the Phoenix metro area. I purchased a distressed office complex. It's 30,000 square feet. I'm turning that section into 50 units of apartments. And because we have land in the back, I'm building another 55 units. It's actually 54 units in the backside. And so we'll have over 100 unit apartment complex, and the ones in the back are new build. We are actually, as I'm on my way to Tacoma on Friday. On Saturday, I have a meeting with a broker in Tacoma for a 2.6 acre parcel where it's going to be new construction. What we're doing is we're going in, and there's a need to compete with Class C real estate right now in multifamily. It's underbuilt. It's affordable housing, not low income housing, not Section 8, just affordable housing products. And so we're building just garden style apartments, new construction. We're able to build them out at about 125 a square foot or thereabouts. And we're able to walk into these things with about 45% equity from the day we finish them and stabilize them at new construction. And what we compete with is Class C real estate. They're a Class A build, right? They're new construction, but they're affordable housing. We're able to compete with the garbage and old assets that are Class C, that are value add properties. And we're able to position ourselves where we don't have no expense into these properties for 20 plus years as far as capital expenses. Obviously, there's ongoing maintenance on any property. So we're doing a little bit of both right now. We're doing value add and we're doing new construction, new build. And I was anti new build since the pandemic. But since there's no inventory now, we just found a little niche in a market that works. And because we're able to build the asset that we need for such a reasonable price and deliver a new product experience to a tenant that is otherwise living in an older facility, it's a win-win situation, and we're able to profit from it. So we just, like I tell people, you find a problem, you build a bridge. If you can fill that gap, and you profit.
Interesting. Yeah, I totally agree with you on Class B workforce housing and the bit of oversupply on Class A. How does the balance between e-commerce and retail real estate kind of work out for opportunities for investors? You mentioned warehouses, which I think is really smart. Obviously, we're seeing industrial be huge right now, but you also mentioned small retail. So how are you balancing out those two opportunities that kind of exist in the retail space at the same time?
Entirely different market sector, right? It's entirely different business plan. So I've always been multi-diverse. I try to make sure that I'm positioned in multiple areas. It's helped me in times of economic distress, and it's been advantageous to what saved our businesses during unfortunate circumstances. And so one thing that we've, obviously everybody's now aware that retail, brick and mortar, large big box stores, they're dying. I'm not the first to tell you. I mean, we're underwriting deals that at one point in time, 450,000 square feet worth of retail, sitting on approximately 40 acres of land, valued anywhere between $20 and $30 million. And those same assets today, financially distressed, are worth, we can go in and pick them up for under $4 million. And the key behind these is that we're able to go and pick them up for $4 million, under $4 million, and there's what's called pad sites on site on these. And so we get the assets almost essentially for free.
Where are you investing? Is it mostly on the West Coast? You mentioned Phoenix, you mentioned Tacoma. What other markets are you looking at?
We're in the Albuquerque market. We're also doing stuff down in California, Palm Springs area. We're down there. We've looked at some assets in Texas. We don't have boots on the ground in Texas right now. So as far as the viability, I'm looking for good partners as well. What's made what we do viable in these states is the partnerships that I've been able to exercise. Up until 2016, I never had any partners at all. I've never had partners. I've always done everything solo. All my companies were in corporations or solely. I'm 100% sole stockholder of all of them. In 2016, I started doing an outreach, knowing that we all get older, right? And moving into my mid 40s at that time, I sat back and said, okay, I'm going to kill myself doing this on my own. It's been a lot of work. It's been, and I've limited my ability to grow and scale to the level that I wanted to. And so in 2016, I sat back and I started doing some reconfiguring. My wife sat down and said, yeah, you really need to figure out how to find good partners. And I was anti-partnerships up to that point. And it took me 2 years to kind of figure out, okay, this is how we're going to structure stuff. In 2018, I started strategically putting together good partnerships. One of them being Ty Lopez, Dr. Alex Mir. A lot of people know who they are in the e-commerce industry. And so we formed a relationship and a friendship over a couple years. And now I sit as the CEO of ESR, e-commerce supporting real estate. And we have warehouses in Virginia. We have luxury properties down in Puerto Rico. We have holdings that we're working on acquiring in Chicago and the North Carolina markets. And those are independent of the other ones that I've been talking about. But then I've been able to exercise partnerships with Ramez Dabbs down in Seattle. He runs a lot of what I'm talking about. I'm the strategic partner in putting all this stuff together, and he's the action partner on site. And same thing with Kyle Mitchell in Phoenix. I'm the strategic partner. I deal with all the construction development stuff, and he's the on-site partner. And he's dealing with logistics daily on site. And Dave Carbajal down in the California market, and in fact, I'll be up there next week or 2 weeks from now, with David over in Palm Springs. And same effect. I'm the logistical partner. I'm the one that understands how to scale this stuff, and I'm teaching it to them. But they're good, honest, hardworking professionals in the industry that have already done well. All of them have already made millions of dollars, but they're more youthful than I am, and so together we're able to go in and partner, and we're scaling stuff in multiple states. So it's been really cool. What I've been working on since 2016 is working. Thank God. It's taken several years. I think most people want this stuff overnight. It doesn't happen overnight. It's been a 5-year run so far. In 2018, I said I got a 10-year run that I'm doing from 2018 to 2028. And I want to be in a position in 2028, which I will be, to pick and choose at that time the deals I want to do versus the deals I have to do to set my life up to where I need it to be, so that way I can be mobile with my kids as they're in college. So that was the goal, and that's what we're moving towards. And so partnerships are what's allowed us to be able to do what we're doing right now.
Interesting. I like that. You'll slow down, but you won't get out of the game, which I think I hear from a lot of investors. The game is just too much fun. Well, thank you so much, Jerome. This was really fantastic, and good luck with that construction site. Remember, listeners, you can see Jerome's courses on real estate and learn his advice for house hacking. Check out his courses at jeromemaldonado.com. Stay well and stay invested.